Oh, JP Morgan, I did not expect this from you. You might remember a few months back, Jimmy Dimon sharing the situation about the cockroaches referring to private credit. Remember? Let me now tell you, just to refresh some memories, on how private credit works. So, imagine this, JP Morgan has a customer who would like to borrow some money. However, they are considered to be way too risky for JP Morgan to actually qualify a loan for them. However, there is a non-bank entities that would give a loan to that entity or the individual who would not qualify for the loan with JP Morgan, and those non-bank entities would lend at substantially higher rate or substantially lesser conditions. However, this non-bank entity will borrow capital from JP Morgan against the collateral that is being given to that non-bank entity. Which means that essentially the books of JPM are super clean, and the non-bank entity working with JPM can pocket the difference. And this game of musical chairs will work as perfect as possible as long as the collateral for the very first non-prime loan would be selling or will be actually corresponding to this 100 cents on a dollar rule, which means that, let's say, if collateral is calculated as $100,000, it is actually worth $100,000. But what the recent history is telling us, usually in a recessionary environment, you are starting to see this trending as like 70 cents on a dollar or even 50 cents on a dollar, in some critical cases even showing this to be absolutely worthless. So which means that, let's say, bank giving